think we're going to miss a lot of good ideas and a lot of good buys.
Feel free to rattle them off as I ask you about the one other area too. We've talked a little bit about the private markets, and is there something opportunistic as an investor to do? Here's the challenge I get my head around. If people say, look, the private credit problems, they're both, higher on the capital stack, that's fine, and also kind of depend on what happens with software. So does that mean that private equity should be marked down here because they have some of their own concerns between high rates and the quality of some of the underlying and what's going on? Is that an opportunity for those, if you take the long view to say, of course, you'd want to pick up a name like a, fill in the blank blue chip company at 40% off. I don't know if you do something there.
I don't know what your proof point is in the short term, but I think long term, these companies are very diversified, right? And you definitely have the great managers and then not so great managers. And we had fraud as well, so that we had to contend with. It's not all fraud. So I do think, I like what JP Morgan's doing in terms of marking it down. Maybe some other banks have to, but the big banks, the big six, they are so diversified. And Bank of America at RBC's conference, what was it, 2 or 3 weeks ago, talked about all good things, reiterating a lot of what you all said in terms of the consumer, but then also NII growth, M&A, capital markets, and they're flush with cash. Yeah. The big six have $176 billion in excess capital right now. And that after the GSIB rules last week and the Basel III, they're going to have about $220 billion to lend, which we want them to do, and also to return it to shareholders. And they're trading at like 1.2, 1.5 times book. They're not super expensive, and some of the regionals are below book.
And so, Vinu, before we go back down to Houston or hear more specific, I mean, is energy and what some argue that we're going to see this big shift really in capital moving from tech to energy. Do you have a point of view on that, or the way that people should be? We mentioned the market cap that tech is right now. Stephanie mentioned the performance of the equal weight. Is there something to do there?
So one, with Stephanie, I agree on financials. So we've been wrong thus far, but we certainly think it's all in the price. On energy, it's a little bit more dicey because coming into this whole crisis, their earnings trajectory was not good. In fact, it is one of the biggest detractors of the forward guidance, which is going up, which tells you that fundamentally energy was not in a great place. And from a physical standpoint, we were dealing with excess capacity in the oil market. All that has changed overnight because of the war. And the reality now is the war has taken a shape in which the supply constraint may linger for much longer. And energy security becomes, again, a bigger issue. And the Strait of Hormuz, when it returns to normalcy, is pretty much unknown. So I feel that even though fundamentally I still hold that view that energy probably is more than pricing in pretty aggressive oil price deck at this point in time, which is far greater than where the oil strip is, the forward curve right now. But I think we went neutral on it. So from negative, we've gone to neutral, recognizing that this war casts a different shadow and you can't fight that aspect to it.
Marianne,
that's our view on it.
Yeah. Last comment here, same question.
I disagree. I think energy's in a new leadership position. Now, the sector's the best performing. It's up over 30%. I do expect that sometime you're going to get a pullback. When all this gets resolved and energy comes down, you are going to get a correction, but I think these are going to be great buying opportunities. I think we're going to hear a lot about energy companies over the next 3 to 5 years. So it's one of the sectors I'm most bullish on.
Well, let's hear from them right now. Thank you both. Really appreciate it. Vinu Krishna from Barclays, Marianne Bartels of Sanctuary Wealth. And as oil prices are moving higher again today, Brent is at 103 or so last check, WTI at 92, natural gas. I mean, look, we're glad it's not higher. One company watching every twist and turn in the Middle East is ConocoPhillips. Brian Sullivan does bring us a CNBC exclusive with Chairman and CEO Ryan Lance. Hi, Brian.
Hey, Kelly, thank you very much. Yeah, we are joined by Chairman and CEO Ryan Lance. And I know we are also waiting for President Trump to start speaking. So I'm just going to blast this out. Right. Ryan, thank you very much.
Thank you, Brian.
Any impact, obviously, the price of oil, $92 a barrel. Any direct impact on ConocoPhillips from the war on Iran?
Well, we're a big partner with the Qataris in the Ras Laffan, the big LNG projects that are supplying LNG to around the world. So we're a significant partner in that asset. And yes, that whole complex has been shut down as a result of this. So 20% of the world's LNG is not now flowing to the world because of the shutdown in the Straits of Hormuz.
Is that a financial impact for ConocoPhillips?
Well, sure. I mean, the revenue's not flowing as the production doesn't flow, but obviously it is an impact, but it's one that's manageable in a big, diverse company like ours. Only represents about 2 to 3% of our company's production and cash flow.
Yeah, it's the world's largest single natural gas facility. So outside of the financial impacts on you, you said it was small, 2 to 3%. What do you see? Could be a 3 to 5 year offline. You're coming online with LNG next year here in the United States. What do you see as a short and longer term impact on the energy supply chain from this?
Well, I think what everybody was concerned about 1 month ago was that there were headwinds to the LNG business because it was going to be oversupplied in the next couple of years. That has certainly turned into a tailwind as a result of some of the actions and taking 20% of this LNG off the market, and that's not replaceable. So we'll see fuel switching in the short term to other forms of energy, oil and coal, and to where they can nuclear and some of those things. So I think the medium-term impact is we're going to see elevated prices as a result of this. All what we can hope is we get back to some normal situation, get these facilities online as quickly as when, so we can reestablish that equilibrium in the world.
But I want to be, we had $65 oil a month ago. We had natural gas here is about the same. It's much different overseas. So it's only been a month.
Right.
We're all hoping for a swift outcome to whatever occurs. Any change for ConocoPhillips's plans and capital spending plans based on the current price of oil, or would you need elevated oil and gas prices for months, quarters, or years to make a real change on your spending plan?
Well, I think our assessment was you have to see a new equilibrium in mid-cycle price over the long haul to get us to really fundamentally change our plans. We've got a pretty resource-rich company right now. We've got ability and options to invest into the portfolio, starting with the U.S. lower 48. We're growing that business already today, but if we see a long-term call for crude that results in a higher price, absolutely we'll be leaning into the opportunities that we have in our portfolio to invest to grow and develop our company.
But how long, Ryan, would it take for oil prices to remain elevated? Okay, let's change our plans and invest more in the United States because now we just have more excess capital.
Yeah, well, I think if you see that developing and you feel comfortable that that's going to persist for a year or two, absolutely you're going to go into that. 2026 is already laid. We made those plans at the end of last year. There's not much we can do to impact 2026 production, but if we see a better call on crude and more elevated prices, then absolutely we'll be reacting this year as we go into 27 and 28 and beyond.
The president said yesterday that when the war ends, oil will drop like a rock. And it was down 12% at the time that he said it already is, but it's not back to 65. Does Ryan Lance think that the war ends tomorrow or next week or next month, back to 65 right away?
Well, I think it's really tough. We're all trying to assess that today. What is the new mid-cycle price? I think what we can say reasonably, the floor has risen up a little bit. And I don't know if that's risen from 60 to 65 to 70 or 75, but I think the floor has come up a little bit. And you have
fundamentals or risk premium?
I think both. I think fundamentals are going to be that all the inventory is going to be drawn as a result of how long this the war lasts, the floating inventory and the onshore inventory. So we'll have to replenish inventories on the back end of this. But there has been some structural things that have happened as well. Like you said, facilities that have been hurt and not the ability to produce oil, generate the product. So some of that's going to take some time to rebuild. So the whole system has to recalibrate. That is going to take some time, which I think raises the floor on the bottom side of prices. You can argue $5 or $10 or what that does. And the real question is what's the trajectory beyond that? And we've been pretty constructive even before this engagement of this war in the Middle East. I think it gives us more confidence that the price is probably going to be higher 3, 4, 5 years from now.
Okay, you've got a huge refining business getting bigger with the Marathon deal. Right now, at this price point for retail gasoline, are you seeing any demand destruction in the American economy?
Yeah, so we're an upstream company only. We're no longer integrated, but we are seeing a little bit of changing behavior in the consumer. So,
like what?
Well, I think the real key is as we come into the summer months and we see what happens in the gasoline price, the reformulation that the president announced, try to get rid of the summer blend and try to help that is going to help. But yeah, we're all watching that pretty closely to kind of see what happens is there demand destruction, not only in the product space, but also in the oil space as well.
You and I have talked at this conference for years and really appreciate you sitting down, by the way. It means a lot, Ryan.
Yeah.
That we're seeing this sort of push-pull with the administration, which is we want the administration wants lower oil and gasoline prices for the affordability. But there's a level at which your industry is going to say, listen, it's fine, but we're not going to invest anymore and grow production because we're not going to lose money on every barrel. Is there a happy medium somewhere in there between prices, growth, and affordability for the American?
Yeah, I think there absolutely is. I mean, I think we were kind of establishing that in the kind of mid $60 to $70 range for oil prices. It was certainly enough for companies like ours with a really good, strong portfolio, low cost supply, that we could invest a reasonable amount of our capital back into the company for growth and development, but also give a reasonable amount back to the shareholder. So it's really balanced. It's really trying to get some consistency built in and try to tampen the volatility that's naturally in our business. That gives us more concern, more ability to invest in some of the long-range projects like we're doing in LNG, like we're doing in Alaska. It gives us more confidence to do that when we see that trajectory over the longer term, and that's what's important, and dampen out the spikes, the peaks and the valleys.
So you mentioned Alaska.
Yeah.
You are, I believe, the biggest operator
We are.
up there. I was up there less than a year ago to your shop.
Yeah,
Met some of the
thank you.
great men and women that are putting in hard work up. I mean, that's 2 weeks on, 2 weeks off. That's a different life.
And it's the middle of winter still.
Yeah, it felt. I was there in June. It was -7 in the morning. It felt like winter. Exxon and Shell both kind of maybe thinking about coming back into Alaska. You've been there forever. Yesterday, Secretary of Interior Doug Burgum told us on air he was confident that the Alaska LNG pipeline was going to be built.
Yeah, we're hoping.
Are you as confident?
I think it's got some hurdles to do. I think they've made a lot of progress.
Well, $44 billion is a pretty big hurdle.
Yeah, and probably that may be a light estimate too, but we'll see. But they made a lot of progress. We have a lot of gas and gas production, and we've demonstrated our ability and our willingness to make the investments that we'd have to make that gas available for a project at LNG. I've worked on that project 4 times over the last 40 years, and I think it is as close as it's ever been to realizing a maturity and actually getting a project in place.
And then very quickly, finally, so if we see other majors go back to Alaska where you've been for a long time, Exxon's up there in a way too, but if they come back in a bigger way, is that a good thing
Oh, absolutely.
for ConocoPhillips?
I think it's a good thing for the competition. It's a good thing for Alaska. We welcome more people to put more oil into the infrastructure that's already been built in Alaska. So we welcome our partners and our competitors back again to the great state of Alaska.
And a very different way of life up top. Mile Zero, I saw at the Alaska pipeline.
That's
Amazing
right.
place to be. Ryan Lance, Chair and CEO of ConocoPhillips. Really appreciate your time today. Ryan, thank you.
Thank you, Brian.
Thank you. Kelly.
Brian and Ryan, thanks. And we're going to take a quick break. More Power Lunch, possibly hearing from the president. Dow's down 33 points. We're back right after this. the conflict in Iran is not the only major story that's dominating the conversation down at this year's CERAWeek. Power demand and how to fuel the AI revolution, that would have been the whole story, front and center. One company right in the middle of that is GE Vernova. The stock is on track for another record close. You're literally a broken record talking about this. It's up 160% over the past year. And Brian is back here with a CNBC First On interview with the CEO. Hi, Brian.
Hey, Kelly, thank you very much. Yeah, big run there. Scott Strazik is the CEO of GE Vernova. And I just want to say to you and also the viewers, again, we are potentially waiting for President Trump.
Yes.
If he comes out, I'll have to jump out. I don't want you to think I'm rude. My mom would get very upset.
No worries. Thanks for having me on the show, Brian.
That may happen. 160% gain on your stock over the year. Everybody I talk to here at Energy, anywhere I go, they say GE Vernova, GE Vernova. Tell our viewers, your investors who are watching right now, exactly where in the energy supply chain you are.
Well, we provide 25% of the world's electricity every day with our equipment through our customers. In the U.S., that's more than 50% of the country's electricity every day through our customers with our equipment.
Scott, sit tight. The President Trump is speaking at the Oval Office in Washington, D.C. Let's go to the president right now.
Citizenship. Ideally, you want to end mail-in ballots because there's tremendous corruption. Then we added a couple of things, Mark Wayne, like I don't think being a great athlete and having a family of great athletes, they have produced great athletes in this family, all-American wrestlers. They especially like wrestling, by the way. And what about baseball? Do you play baseball? Anything? They like wrestling. But I don't think that you would say that his family, and I don't know this for a fact, and I shouldn't say it because I could get myself, does anybody in your family want men to play in women's sports? I don't think so, Jim, right? I don't think so. I don't think. How would they do? Would they do good wrestling you? They would be in trouble? He said, yes, they'd be in big trouble. It's so crazy. So that would be one. And then we have a few others that we call them the best of Trump. But if you look at transgender mutilization of children, we don't want that. It's the mutilization of children. We don't want that. So generally speaking, I think I can answer that Mark Wayne would be very much in favor of what I'm in favor of. Would you say that's right, Mark? I can't think of too many things. He might be worse. He might be worse than me. That's my look at his wife and say, that's right. But so, yeah, he's going to be great. Yeah.
Do you believe the secretary will run DHS any differently than Kristi Noem did? What do you hope to see as his priorities?
Well, we had a good run. Look, we created the strongest border with the help of that man right there. Tom is so incredible. He's going to be a big influence here, too. There's nobody more professional, nobody better. There's nobody better as a human being. You know, he looks tough, but he's got a good heart. But not too good. Don't make it too good. But, you know, we had Tom. We have the safest border we've ever had. We have a lot of assets, but a lot of things we can do, and we're going to do. We have to get criminals out of our country that were allowed in by Biden. Yeah, please.
Mr. President, do you support what appears to be a merging agreement coming out of the Senate to reopen DHS?
Well, I'm going to look at it, and we're going to take a good hard look at it. I want to support Republicans, and, you know, sometimes it's awfully hard to get votes when you have Democrats that don't want to have voter ID. They don't want to have proof of citizenship. They don't want to do anything about men playing in women's sports. That's one of the items we put on, you know. And I did that just because it's so popular. You know, they say that's at least an 80-20 issue. No, it's about a 99-1. I don't think it's, what do you think, Pete? Do you think it's 80-20? Who's closer, 80-20 or 99-1?
Almost 100.
Yeah, I think 100 is really the, so, you know, so I support that, and I support common sense.
Would you be comfortable with a deal that involves separating ICE funding from the DHS funding package in order to reopen?
Well, they're working on all of that. You know, that's a detail that they'll explain later. Please.
Election integrity and DHS measures. Mr. President, since CISA falls under DHS, and given that many credible voices have raised concerns over its premature and possibly likely faulty 2020 election assessment, will you and Secretary Mullen implement reforms at CISA and at DHS to ensure full confidence in future elections, like in the upcoming?
About it. We'll talk about it, you know, pros and cons. Look, they used it to try and put me in prison, right? So I can't be thrilled with it. They used that very strongly, very illegally. The Democrats are thugs, and I don't want to say that. It would be nice to everyone get along, but it's a different country than it was years ago. It was very dangerous the way they used it. and they weaponize government. They use that to weaponize government. So I'm not thrilled, but I'll also go along with two groups of people, the military, and I think the military likes it, right? And I'll go along with the senators. I'm fine. But I was a big victim of it. Yeah, please.
Are you going to send Jared Kushner and Steve Witkoff to do direct negotiations with the Iranians?
Yeah, well, we're in negotiations, as it turned out, and now you've seen what I said yesterday was exactly correct. We're in negotiations right now. They're doing it along with Marco, JD. We have a number of people doing it, and the other side, I can tell you, they'd like to make a deal. And who wouldn't if you were there? Look, their Navy's gone, their Air Force is gone, their communications are gone. That's the biggest problem. It's very hard to communicate them between themselves. All of the anti-aircraft is gone. Most of their missiles are gone. We either shot them or they shot them and don't have them anymore. They're down to a trickle. Pretty much everything they have is gone. I don't know. Can you name one thing that's not gone, or can you name one thing that's doing well? You know, if you read the papers, you think we're tied. You think we're in a tough battle. We are roaming free over Tehran, the city, Tehran, as opposed to Iran. We're roaming free. We can do whatever we want. And as you know, today we were going to have the privilege of shooting down a very big electric generation plant, one of the biggest in the world. And one shot to the right location ends the plant, it collapses. And we held off based on the fact that we're negotiating. Yeah.
What do you think was the turning point to make you want to pursue a ceasefire? A few days ago, you said you wanted to continue bombing Iran. Now you want to pursue peace talks. Was there something that happened?
The fact that they're talking to us and they're talking sense. And remember, it all starts with they cannot have a nuclear weapon. Just, I said yesterday, they said, what are the top 10? I said, well, number 1, 2, and 3 is they can't have a nuclear weapon. And they're not going to have a nuclear weapon. And we're talking about that. And I don't want to say in advance, but they've agreed they will never have a nuclear weapon. They've agreed to that.
How do you ensure they won't have a nuclear
Your
weapon?
former Border Patrol chief, Greg Bavino, said his only regret is that he didn't catch more illegal aliens. What's your reaction to that?
Who said that?
That's your former Border Patrol chief. He just retired.
Well, I mean, we captured a lot. They were allowed into the country by Sleepy Joe and that group of incompetent people that were, he was the worst president ever, the group of incompetent people. To me, that's the biggest scar. Inflation, they caused the highest inflation we've ever had. We've already gotten rid of it. The biggest scar is what they did, the people that they allowed from prisons all over the world. They came from the Congo, from all over South America. Rough people, really tough people. So, no, I understand what he means. He would have liked to have captured more. I'm not capturing so much as removing. We're removing thousands of people, and many are self-deporting because we're going after them so powerfully that they're self-deporting. Tom, going back, I think that's one of the big unkept secrets. We have thousands and thousands of people, and they're self-deporting. They're going back to where they came from. But what we want really is the criminals. We're really focused on those criminals, getting them out. Yeah.
What's your message right now to Democrats and also to Americans that are stuck in airports? It's really devastating watching it online because Democrats won't fund DHS.
What's devastating?
Your message to Americans right now stuck in airports as we speak because Democrats won't fund
they
DHS?
just don't, they won't. Look, this is a deal that was done in the great big beautiful deal, which gave you the biggest tax cuts ever, including no tax on tips and no tax on Social Security for the seniors. Think of it, no tax on overtime, tax deductions when you buy a car, you take money, you pay interest on the money, you deduct it. We've never had that for people buying cars, if it's an American car, only if it's an American car. But they are just they stick together, the Democrats. I tell you, I give them great credit for that. We have some that they're not good stickers. We have guys like Tom Massey in Congress, who's terrible. He's just terrible, terrible person. I call him Rand Paul Jr. But they don't vote. Rand Paul, rarely votes for stuff. Likes me, says I'm a great president. He said the other day, I'm a great president, one of the greatest presidents. But I said, do me a favor, vote for us and don't call me a great. I'd rather have the vote than the statement. But we have people that don't stick together, and those people hopefully will someday be gone. The thing I most respect about the Democrats, even on horrible policy, they stick together. What they do have, though, is horrible policy. Transgender for everyone, open borders, men and women's sports. They have the worst policy that you can imagine. And so whether they stick together or not, I mean, they have just this terrible policy. We have great policy. Republicans have great policy. We have common sense policy, but it's great policy. That's our biggest advantage, is our policy is correct. Yeah, please.
Mr. President, are you encouraging our allies in the Gulf to be more involved in the Iran operation?
Say it.
Are you encouraging our allies in the Gulf to be more involved in the Iran operation?
Yeah, I mean, a little bit, but more NATO. I think our Gulf allies have been pretty good, to be honest with you. UAE's been hit so hard. He got hit by 1,400 rockets, shot them all out of the air with our great Patriot missiles. Think of it, they shot 100 missiles at one of our aircraft carriers, the Abraham Lincoln, one of the biggest ships in the world, actually. And out of 101 missiles shot, every single one of them was knocked down in the sea. Think of that. Think of what that means. 101 missiles, highly sophisticated, very fast missiles shot. Out of 101, all 101 were shot down, and now, for the most part, lie at the bottom of the sea. Pretty amazing, right? Pretty amazing. Our military is amazing, Pete. You know the attack I'm talking about recently? 101 shot. I said, wow. I saw that. You can see we have sort of pretty good equipment that we see. It's called the red line. Those red lines were thick, right? I said, that's a lot. And then we saw them one by one just get shot. And these guys that do the shooting are the coolest cucumbers ever. You know, most people, you don't have a lot of time. When a missile's going at 2,500 miles an hour, I don't care how far away it is, you don't have a lot of time. But I watched them sit down and think. Great students, MITs, a lot of MITs, a lot of guys like this, and not as much into the muscle as they are this one right here. And amazing to watch them perform under great pressure, because they have a matter of seconds to do it. If they don't do it properly, it's a big problem, you know, because these were powerful. These were very powerful missiles coming. And so a lot of people choke. They don't choke. These guys don't choke. They're the best in the world. We have the best in the world, yeah.
Mr. President, what would be your message today to the TSA agents who have been staying home in recent days amid this impasse?
Well, some of them are needing money, you know, because the Democrats cut off their money. I blame the Democrats more than anything else. But some of them, you know, they didn't get paid because they're not funded by the Democrats. This is a Democrat problem. In fact, I actually said to the Senate, why would you say this is a Democrat problem? I think the polls are showing it's a Democrat problem. And they'll do anything actually to hurt our country so they can try and win the midterms. And if we ever went back to our old policies, we wouldn't have a country left.
If they get a deal, Republicans and Democrats in the Senate, to fund all but enforcement operations of ICE, to get those TSA agents repaid and to open up the rest of the department, would you sign that?
Well, I don't want to comment until I see the deal, but as you know, they're negotiating a deal. I guess they're getting fairly close, but I think any deal they make, I'm pretty much not happy with it. These guys came in, they wouldn't pay people. You know, they had a deal to pay. They had to break their deal. The Democrats broke the deal that we had. It was all done. Everything was fine. And then they just said, well, we're not going to pay anymore. And they hurt our country. And at a very difficult time because, you know, we are at, as they would say, a war. They call it a war. I call it a military operation, a very successful one, like successful like nobody's ever seen before. Hey, Venezuela was equally as successful. That was a great thing. No, the Democrats had a deal. It was a done deal. And then they said, well, we're not going to pay. And so a lot of people suffered over that and put our country in danger. You have another question? You haven't been here in a while.
Well, on Iran, can you give us any more sense of who exactly in Iran it is, either Witkoff and Kushner and others you're speaking with?
Yeah, we had, I hate to say this in front of these young people. They're not children. They're I spoke to most of them. They sound like adults to me, even though they are sort of children, right? They'll always be your children. But I hate to say it, but we killed all their leadership. And then they met to choose new leaders, and we killed all of them. And now we have a new group, and we can easily do that, but let's see how they turn out. We have really regime change. You know, this is a change in the regime because the leaders are all very different than the ones that we started off with that created all those problems. So this was, I think we can say, Jason, this is regime change, right?
What makes you trust them?
I don't trust anybody. I don't trust you. I mean, that's only because I know you. But if I didn't know you, I'd probably have more trust. But I don't trust anyone.
Why bother talking to them?
Why do you say that? Why do you say what makes you trust? Do you think I trust them? I don't trust them.
Then why bother talking to them?
Because they're going to make a deal. They're going to make a deal. They did something yesterday that was amazing, actually. They gave us a present, and the present arrived today. And it was a very big present worth a tremendous amount of money. And I'm not going to tell you what that present is, but it was a very significant prize. And they gave it to us, and they said they were going to give it. So that meant one thing to me: we're dealing with the right people.
Is that nuclear related?
No, it wasn't nuclear related. It was oil and gas related, and it was a very nice thing they did. But what it showed me is that we're dealing with the right people. Because, you know, you don't know, because the leadership was killed, all gone. Khomeini, all gone, as the expression goes, the past supreme leader. And then the new supreme leader was racked up, at a minimum racked up pretty good, and everyone else was gone. And then many of the people in the third tier are gone, but we're dealing with a group of people that I think turn out, and the present, the gift they made to us was very significant, and they said they were going to do it, and it happened, and they're the only ones that could have done it. Jennifer?
Was it related to the Strait of Hormuz and the flow of...
Yeah, it was related to the flow and to the strait, yeah, it was.
Are you negotiating on who's going to control the strait from now on?
No, we'll have control of anything we want. Look, if we can end this without more lives being down, without knocking out $10 billion electric plants that are brand new and the apple of their eye, I'd like to be able to do that, you know. But they can't have certain things. I mean, you know the things. I don't have to go over the list, but again, it starts with no nuclear weapons, and they've agreed to that. There won't be any nuclear weapons. They're not going to have, and they're not going to have enrichment, any of those things. But look, I hate to say that we're in a very good bargaining position, and I hate to say that they're defenseless because, you know, until that last missile is fired, they have little power. But we are in about the best bargaining position. We're way ahead of schedule. And again, they have no Navy and they have no Air Force and they have no missile protection, and most of their missiles are gone. Most of their launches we've killed. You know, we've killed about 82% of their launches. So even if they had a missile, they can't launch it. We've been very effective. We have the greatest military in the world. Nobody even comes close. We have the best military equipment in the world. Go ahead.
On Saudi Arabia, there's been some reporting that you've been talking to the Crown Prince. Have you been focused on normalization between Saudi Arabia and Israel at this point?
No, we have a great relationship with Saudi Arabia. What do you hear with Saudi Arabia?
Just hearing that you've been talking and that he has been encouraging you to do certain things related to Iran. Can you share a little bit?
He's a warrior. He does, yeah, he's a warrior. He's fighting with us, by the way. Saudi Arabia has been excellent, and UAE, excellent. And I will tell you, Qatar, incredible. Qatar took a hit, pretty bad hit. Qatar is very close, you know, they're essentially, you can walk right over the border. Qatar took a hit. They've been great. They've been very strong. Kuwait, they had a little mishap. They shot down 3 planes with our missiles. They happen to be our planes, but the pilots made it. Can you imagine the pilots making it? The pilots saw what was coming, and they said, those are patriots. We're not going to escape patriots, and they got out of there pretty quick, Pete, right? Pretty amazing that they got out. The 3 pilots lived. They're fine. In fact, they're flying today.
Was the Kuwaitis that accidentally fired the missile?
Yeah, the Kuwaitis made a mistake. They fired. They thought they were firing at the enemy. It was, as the expression goes, friendly fire. But the pilots are great. They're flying today. Pretty amazing when you think of it. Yeah.
President Trump, on a human level, how hopeful are you that this peace deal will work out? Like as a human,
On what?
On a human level, not as the President of the United States. How hopeful are you that this peace deal will work out with Iran?
You're talking about to end it? Well, I think we're going to end it. I can't tell you for sure. You know, I don't like to say this. We've won this. This war has been won. The only one that likes to keep it going is the fake news. I mean, the New York Times, you read the New York Times, it's like we're not winning a war where they have no Navy and they have no Air Force and they have no nothing. And we literally have planes flying over Tehran and other parts of their country. They can't do a thing about it. For instance, if I want to take down that power plant, that very big, powerful power plant, they can't do a thing about it. It's like, take me. That's all they can do. And yet, if you read the New York Times or if you watch ABC fake news or NBC fake news, you'd say it's a close battle. It's not a close battle. They're totally defeated. You know, we killed their Navy in, would you say 3 days, Pete? Gone. In fact, I was a little upset with Pete. I said, why didn't you save the ships? We could have
Negotiations.
involved in them. JD is involved, and Marco's involved, and Jared Kushner's involved, very smart guy, and Steve Witkoff, smart guy, is involved, and I'm involved. I'm involved. Why? Well, I'm going to be so big. Oh, I don't want to talk about it. I'm the President of the United States, Tom, and I'm not going to talk about it. It's beneath me to talk about saving millions of lives, because that's what you're talking about. You're talking about saving millions of lives. If Iran had a nuclear weapon, they would have used it. And if I didn't end the horrible Barack Hussein Obama Iran nuclear deal in my first administration, they would have had a nuclear weapon 3 or 4 years ago. They would have used it. I would have never gotten the chance probably to be president. Who knows what it would have been so devastating. And if we didn't send those beautiful B-2 bombers, they took them off my desk. They were right there. I don't know why. But if we didn't have those beautiful, the B-2 hit, well, which was so we obliterated it despite CNN. CNN said, well, maybe the word obliteration said, no, we obliterated it. Just obliterated their nuclear potential. You would have had them having 2 weeks after that attack, had we not made the attack, they would have had a nuclear weapon. They would have absolutely used it. And they would have used it on the entire Middle East, including Israel. And you know why you see that? Because unexpectedly, when this war broke out, unexpectedly, they started sending missiles to UAE, Qatar, Saudi Arabia, Kuwait, Bahrain, and elsewhere. And nobody thought they were there. Were you equally surprised by that, Pete?
Way more than we thought.
Pete, do you want to give about a 3-minute statement on how we're doing in this, as I call it, military operation? People don't like me using the word war, so I won't. But the Democrats call it war. How about a little statement? I think he's done a very good job. Do we agree he's done a good job, Mark? Can we take some of your time?
Well, thank you, Mr. President. You're spot on. Never in history has a modern military, Iran had a modern military, a modern Navy, a modern Air Force, modern air defenses, leadership, massive bunker. Never has a modern military been so bad.
And that was President Trump speaking live from the Oval Office as Mark Wayne Mullen was being sworn in as the new Secretary of Homeland Security. The president, of course, taking a variety of questions about the war in Iran, the economy, and more. The Dow is about 76 points, kind of our most highly sensitive one because the markets are largely unchanged today, showing a little bit more optimism in the markets as the president has declared this war has been won. As it relates to negotiations, he says they're happening. He named Jared Kushner, Steve Witkoff, and he said, I'm involved in the negotiations. Eamon Javers is standing by in Washington with more reaction to what we just heard, Eamon, as the president continues to defend the war.
Kelly, he also said that the Secretary of State is involved, J.D. Vance is involved in those negotiations, but not saying exactly who the United States is negotiating with on the other side of this transaction. So not really clear who is in charge in Iran right now and who is negotiating with the U.S. team. The president also made what I thought was a really interesting but very cryptic comment about something that the Iranian leadership did. It sounds almost as if, and this is just a guess here, it sounds almost as if the United States demanded that they do something in order to prove that they actually had command and control of the Iranian state, and they were able to do it. The president described it as a present that the Iranians gave to the United States. He wouldn't give any detail about what that present was, when it, what it, you know, how, was it money, was it something physical, was it a gesture? We just don't know. But this is the second time in as many days the president has made cryptic remarks as to what's going on in Iran, alluding to things that he knows that he can't say. Yesterday, he told reporters that the Iranians had, there was some question about where the money was going to finance the Iranian oil purchases. So, you know, are those two things related? Is there some rediversion of the money that's going to buy Iranian oil to some other entity? You know, we just don't know as we stand here, but the president in 2 days has made very cryptic remarks about where the money is going that's buying Iranian oil, and now today about a present that the Iranians gave to the U.S. government. So we'll try to find out more. I'm not sure that the White House will tell us anymore because the president signaled that was as much as he wanted to share.
Right, but it's great that you picked up on that, Eamon. I also think people in the markets are highly attuned to this action that the president keeps talking about that would be a bombing of the electricity generation plant that he says kind of basically powers Tehran or Iran. Now, a lot of observers have commented that that would be a war crime. But I think in the markets, while that's being prosecuted, whether or not that actually happens, the concern is what knock-on effects this escalation would have if it does escalate. So I think hearing him talk about the choice not to do that, whatever it would have amounted to, might give people a feeling that the most acute moment that might have happened would have passed.
Yeah, and I think that was the walk back yesterday, right? I mean, remember that the president had said that he would do that unless the Iranians, you know, gave in. And yesterday what he said was, well, actually, the Iranians are talking to us, and so now we're not going to bomb any of their power plants, and we're going to allow them to have this 5-day grace period. So, you know, is the president going to be intent on doing that? It's unclear, but clearly one of the things he wants to do is to preserve civilian infrastructure in the region, so you don't have sort of mass chaos and, you know, breakdown of civil society in Iran after the war, presuming that he can still get a government in place that he can deal with, which seems to be his strategy as of right now.
All right. Eamon, thank you. Appreciate it for now. Eamon Jabbers at the White House. Want to mention some of these big moves we've been seeing, not so much in the stock market, but in the bond markets today. The 2-year yield was up 13 basis points at one point after a $69 billion 2-year auction this afternoon. That offering saw weak demand. Rick Santelli gave it a D. The rising price of oil is keeping investors on edge. It's tamed down a little bit. We're up about 9 points intraday now, and we're seeing some global bond moves influencing our 10-year as well. We'll have a lot more Power Lunch right after this. Stay with us.
All right, welcome back to Power Lunch. I'm Brian Sullivan. We're here at the CERA Week by S&P Global Conference in Houston, Texas. And we've got a big interview to wrap things up. Brad Smith of Microsoft is here. Let's talk data centers. Let's talk energy. Let's talk nuclear. Let's talk. Brad, welcome. Good to have you on. Thanks for joining us. It's been a crazy hour. Let's talk about what's going on with the world, because there's some chatter here at the conference. Will what we see globally with the war in Iran, will that trickle to the United States eventually? It hasn't yet. Natural gas prices still $3. And will that damage or dent our Microsoft's AI capital spending plans in America?
I think we're resolute. We need more data center capacity. Our customers want us to provide them with more services. We need to keep investing, and we'll keep on that path.
So there's nothing on the table right now for Microsoft where you guys have gotten together and said, well, maybe we should pull back on our spending plans? Hasn't happened yet.
When you have more demand than supply, you need to grow supply. It doesn't mean that there are not supply chain complexities arising out of the events in the Middle East, but we are experienced in managing supply chain complexity.
How complex? It already was complex the last month or so. Does that add a layer of complexity to you if this were to go for another couple of months? Would that add other layers of complexity for Microsoft?
Well, I think not in ways that would or should disrupt our ability to keep moving forward to serve our customers, including in the Middle East itself. Obviously, you have ripple effects when you have things like petrochemicals. You know, we use chips, memory chips that are manufactured in Korea. They need to run on electricity. The electricity may be based on LNG coming from the Persian Gulf. The world is quite interconnected, but I think part of running a global company, especially a global infrastructure company and cloud platform and AI services, is about managing that.
And there will be a day, I don't know if it's tomorrow, next week, next month, next year, where this is behind us and we look to the future. You're big into nuclear. You just had a big blog post on nuclear as well. Does what we're seeing change the way you think or Microsoft thinks about nuclear as a more viable option versus a fuel like an LNG that can be, as we now know, disrupted a little more easily?
Well, I would say this month is a powerful reminder to all of us in the world of what people in the energy sector know every day. The world, our prosperity, our standard of living is all dependent on a diversified set of energy sources. You know, for a company like Microsoft in our data centers, you know, we're having to build more data centers, bring in more electricity, do everything we can to ensure we don't impact the electricity prices of our neighbors. That does mean more sources of electricity, including nuclear as one.
Yeah, so what is the nuclear plan for Microsoft?
Well, for us, we've already started down that path. We invested with Constellation, with Crane, to restart one of the reactors at 3 Mile Island. That will bring almost a gigawatt of electricity onto the grid. We're looking at a future with SMRs, but we're also looking, as we announced today with NVIDIA, to create solutions, AI and cloud solutions, so the nuclear sector can better design, permit, build, and operate, in effect, build up the nuclear ecosystem that everyone, I think, in the United States would benefit from having.
And we've been here for 2 days talking about some really serious, heady stuff that's happening on the ground, and that is incredibly relevant. But I want to wrap it up by looking up to the stars a little bit, being optimistic. Data centers in space, yes or no?
Never bet against Elon Musk, but
what about Microsoft?
We have our feet on the ground.
Satya Nadella's a pretty big thinker. I don't know if you've heard about this guy.
You know, in a way, it's great for humanity to aspire to do new things. Let's master in 2026 what we need to build on planet Earth, and we'll follow closely the progress of SpaceX. It's always an exciting company.
I just wonder if Microsoft maybe has its own little secret space plan built in there, Brad.
You
Feel
know,
free to share it with us.
No secret space plan unless it's been a secret from me.
Okay, and I can't imagine that it would be being the president of Microsoft and the man largely with a huge team, great team behind you, responsible for so much that's built out. Brad Smith, president of Microsoft, really appreciate your time. Thank you very much for joining us.
Thank you.
All right, so we're going to wrap up our coverage here from CERAWeek by S&P Global. There's a lot more, by the way, content online as well. You go to cnbc.com/power-insider, just cnbc.com. There's a lot of interviews that we did here over the last 2 days. Great team. Vinny, Andy, Harriet, Jose, the whole squad. Appreciate it. Thank you all for watching. Closing bell, overtime starts right now.
Well, we're not in overtime quite yet, but nonetheless, Brian, thank you very much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with stocks trying for another positive finish. We're going to track the action right into the end of the session, but there's the scorecard with 60 to go in regulation. We're working on it. The Russell's doing a pretty good job. The other majors, they got a little work to do. S&P's barely negative. The NASDAQ down 0.5%. Dow's going positive, as you see. Sectors are mostly split. Energy, not surprisingly, is the outperformer today. It's good for about 2%. Oil prices are up again, so that's exactly what you would expect to see. About 4% rise on WTI above 90. There's private credit. Those names under the microscope lately as well. Ares limiting withdrawals in one of its funds today. We're going to ask Marathon's Bruce Richards where all of this is heading when he joins me in just a little bit. Elsewhere, chip equipment names, they're higher again. So is Apple. So are several of the AI power names, and we're watching those closely today, too. It does take us to our talk of the tape. Whether the president's social media post yesterday has put a bottom in this market. Let's ask SoFi's Liz Thomas. She's with me here at Post 9. You say not so fast. Don't buy the dip. This could get worse before it gets better. What about that, though, the so-called Trump put of yesterday morning and then the comments that he was just making in the Oval, trying to once again put a pretty good message behind what's happening over in the Middle East?
I didn't hear anything in the comments that the Strait is open. So the supply shock remains. And if it really was over, we wouldn't have this supply shock anymore and everything that had already pressured markets. And actually the market reaction since the comments we just heard has been benign. I mean, Brent's still above 100. It's at 104 and rising since that conversation ended. We've got a market that I think has not priced in what could still get worse. And it appears that perhaps it is going to get worse later this week, maybe next week, if we're sending troops over to the Middle East. So perhaps the conflict continues to escalate before it finally de-escalates. Really what we need to see is that the Strait of Hormuz is open again and this supply shock can go away.
That's all that matters to you at this point.
That's not all that matters, but...
Well, you know what I mean. It's like, that's the most important thing to the market.
That's what
open the Strait, and the stock market will be fine. Yeah. Oil prices will come down. Without that happening, you just don't believe the other stuff makes a market enough difference in the direction of the market.
I don't think it's convincing enough. And I think we're seeing that right now. We can make all the comments we want. I don't think it's convincing enough until the supply shock has been somewhat remediated.
All right, let me ask you this. So and in that light, Barclays raises their target today on the S&P, right, to 7650. Okay, they were at 7,400, and they say the following: macro risks are rising, right? That they're not naive to the things that are out there. They talk about a lot what you do. Middle East war, so you have AI disruption, private credit stress, but the U.S. still leads on nominal growth and tech-led secular tailwinds. We're incrementally bullish on the profit outlook. They raised their earnings estimates and their price target, as I said, on earnings, not multiples, but risks skew to the left. Do you disagree with that?
I mean, this is probably not a moment when I'd be raising my expectations broadly on earnings. I do agree that the tech story is really still in place. I don't see anything necessarily about this war that's going to slow down AI CapEx. So I think that story, we came into the year with that story. It got stronger as the year went on. Announcements and guidance by companies got stronger. I don't think this changes that picture. So to the extent that tech is responsible for the majority of earnings in the S&P, I understand the take that we expect it to stay strong, maybe even rise a little bit because of guidance. However, the market trends coming into this year were rotational. They were cyclical. They were not favoring tech. They beat software down, right, to the death. So I don't think we're going to go back to those trends. I think this conflict has lasted long enough now that we're not going to just easily go. We're in week 4. In the first couple weeks, I was saying, you know what, if this de-escalates, we'll go back to where we were before. All those trends sort of stay in place. We're still cyclically bullish. Everybody.
Why would that change now? I mean, if it de-escalates now, why would all that go away if earnings expectations and estimates are still intact? That's what matters more than anything else, right? And until that changes, why should we change our view?
Well, it might change, and I guess that's the next step of this. So I don't think it will change for tech companies, but it might change for other companies. So even if this conflict de-escalates now, damage has been done. There have been facilities that have been damaged. The supply perhaps could come back online if the strait is reopened, but there's a lot of stuff that still needs to be restored, and that's going to take time. So I don't think oil prices go back down to where they were before this all began.
But the market will move well ahead of that, right? If there's a headline, we both know how this works. If there's a headline that says ships are now passing through the Strait of Hormuz, market rip, oil plunge, and people are going to say, okay, the worst case was avoided. Didn't last as long as the worst fears have had. Let's get back to business and focus on what matters most. And that's the trend that existed before all this happened.
Well, what existed before all this happened that I don't think has been damaged is the AI trend. But back to business on other things, if oil stays elevated above where it was before, well, we sort of get all of this back online. Now, the U.S. is more insulated from this than Europe and Asia. I think we know that by now. But there's still going to be pressure on some companies because of that, and certain sectors will take that harder than others. But I don't think that this is a scenario anymore where we just erase it all overnight and say it goes back to how it was before and everything rebounds in that same fashion. That's not to say that we won't end higher by the end of the year. I still think that we will. But I don't think that this is a scenario where we just bounce, we have a V-shaped bottom, we bounce back up, and we forget it ever happened.
I don't know. This market's kind of been crazy like that, crazy resilient.
It has been.
Right? If you go back, every, dare I say every, incident, if you want to call it that, over the last year plus has been a V-shaped bounce. As bad as people felt from even going all the way back deep sea, oh my God, this is a game changer for the AI trade. No, stocks rebounded. Liberation Day, you hold up the thing with like 3,000% tariffs are going on this thing. The market falls out of bed. Everybody's like, oh my God, this is way worse than we thought it was going to be. We should sell stocks. Next thing you know, V-shaped bounce, and we're at new record highs.
I forgot all about it.
Why is it going to be different this time?
A lot of other countries have gotten dragged into this, and as I mentioned before, facilities have been damaged. We can't just take that back. So it's not something that just changes overnight. We can't control all of it and take the narrative back, much like we could with tariffs. We could just take the narrative back and say we're not going to impose that the same way. It's not going to be as bad as we thought. There have been other times, even in those V-shaped bounces, that not necessarily self-inflicted pain, but we were able to recover from it because it wasn't something that structurally changed the global economy. Now, I don't think this has structurally changed the global economy yet, but there has been damage done.
Lastly, real quick, others say that the market can't find its footing until financials do. You don't like that group. Still?
Well, in this scenario, I like financials long term, but in this scenario, we've got a yield curve that's flattening. That's generally not good for financials. You've got now Fed hikes being talked about, right? Cuts off the table. I think that's going to swing back, but the volatility in it is just going to make the market punish financials. Financials are a group that I want to see as confirmation. So if we do see a bounce, if we see the market rebound, let's say there is de-escalation in the next week or so, we see a rebound, we want to see things like banks in particular start to take part in that in a really durable way, and I think they can. But my point to start the show, I still think this could get worse before it gets better. And one of those places that it could continue to get hit is financials.
Okay, we'll leave it there, Liz. Thanks for being here. It's Liz Thomas.
Thank you.
With us Post 9. Well, so much for that snapback in software stocks, right? Many are getting absolutely hammered again today. Christina Partsinevelos joining us now with some of the damage, which is widespread and among the biggest names.
Yeah, and there's a reason, there's a correlation, but you said it, software names among the worst performers on the S&P 500, NASDAQ, Atlassian, Zscaler, AppLovin. Look on your screen. Workday, Salesforce, the list continues. Snowflake, all down roughly 5 to 7%. Intraday, the iShares Expanded Tech Software ETF we often use, IGV, has turned negative for March, putting it on pace for a third straight monthly loss. But that weakness ties directly into the vicious cycle with private credit, where alternative asset managers like Ares and KKR hold a heavy exposure to software firms. Software slide first sparked fears over these portfolios, and now these withdrawal caps that keep increasing every day at certain firms are triggering fresh de-risking and selling pressure back into the listed software stocks. So that's adding momentum specifically today. Software slide, though, started long before any Iran headlines, so don't expect a geopolitical resolution to actually fix this. The same issues just persist, Scott. AI threatening legacy licensing models, slowing growth, and a crowded trade unwinding ever since February.
Yeah, been an ugly day. Christina, thank you. That's Christina Parsinello as well. Software's pain plays obviously right into private credit. Those stocks getting hit hard yet again. And now another firm is limiting withdrawals. Our Leslie Picker following the money as always in that space and joins us now with the very latest. Hi, Les.
Hey, Scott. Yeah, Ares is the latest firm to cap redemptions in its semi-liquid private credit fund amid redemption requests totaling 11.6%. Like Apollo yesterday and Cliffwater, Morgan Stanley, and BlackRock in recent weeks, Ares opted to thwart redemptions above 5%. That means investors who, say, wanted $100 back got less than $50. Blackstone is the only major firm that has so far opted to fulfill all the requests in the first quarter. But if the gates didn't exist, the fund would need to sell a bunch of illiquid loans, which could dent performance for the remaining investors, or it would need to take on additional leverage or draw down cash to fulfill redemption requests. However, I would note that Ares Fund actually grew during the quarter, thanks to a $708 million in gross inflows, or $184 million in net inflows. So, Scott, I was curious why they didn't just use the net inflows to fulfill redemptions above the 5% threshold. And I'm told it's because Ares wants to use the dry powder for future investments. So we saw kind of that opportunistic tonality as well in the Apollo letter, but the fund manager is basically saying, we have these gates here for a reason, and we see a solid opportunity ahead of us amid all of this turmoil.
It's why you need to look below the headlines sometimes to get the real story, like you always do. Les, thank you so much. That's Leslie Picker. Now let's bring in Marathon's Bruce Richards. This firm specializes in both the public and private credit markets. He's back with us at Post 9. It's good to see you. Thanks for being here. So you were last on this program 6 months ago, believe it or not, September 11th, in which you said, I like what we're seeing in private credit. Do you still?
No.
So things have changed how much since then in your mind?
So no and yes. So in private credit, there are three big pillars of private credit. Opportunistic credit, I think we're going to be entering, Scott, this amazing cycle for opportunistic credit because there's going to be lots of dislocation, distress, as well as need for capital solutions. So that's a big check, yes. The no is, do I like direct lending? Not the existing funds and the existing fund manager's exposure because of what was just highlighted, but for direct lending today at wider spreads with tight covenants in non-software names, yes, you're getting paid really good returns. And then, of course, in ABL, if it's asset-based lending that's halo, hard assets, low obsolescence, it's great to invest in that segment. So the big risk right now is the software sector with indirect lending. That's all the headlines. That's all the noise, rightfully so. And that's what you should rightfully not like.
Do you guys at Marathon have any loans to software companies?
We have 1% exposure across all of our private credit in software. 1%, where the top managers have an average of 26% exposure to software.
Was that a conscious decision that you made, or just being fortuitous and putting your dollars elsewhere?
It's a very conscious decision. We saw the train wreck coming. I've been saying from the rooftop, singing from the rooftop for the last couple of years that software is going to have a day of reckoning because of what AI, has brought upon the software industry. Everyone's woken up to that today, but everyone at our firm at Marathon knows don't bring a software deal to investment committee because it's a hard no by me and by our CIO Lou. And so that's one. Number two is indirect lending specifically, Scott. Those deals were getting done at 6, 8, and 10 turns of leverage, which is way too much leverage for conservative lenders like Marathon, who likes to lend at 4 turns of leverage.
Let me ask you this question.
Yes.
I looked at your website. It says, the cornerstone of our investment program is grounded in robust risk management. Now, I would gather if I went to all of these firms and on their websites, it would say something similar, right? You guys pride yourself on being great risk managers. Do you think some were not in this scenario? I'm not asking you to name names or firms or anything like that, but do you think there was a lapse in risk management, or has the dislocation in software happened in ways that nobody expected that it would, particularly this quickly?
Scott, I think you know that answer, but let me unpack it for you just a minute. So if you look at Moody's or S&P, they put about 20 industry sectors down as their designations, software just being one. I think the maximum that you want to have in any one industry sector, subsector, is 10%, but the maximum according to risk management models and portfolio diversification rules is 15%. So to be 26% in software is excessive. That's the first point. The second point I'd make, it's not 26% to the investors. It's 26% to the investment managers that have software. It's 52% exposure to the investors because it has a turn of leverage. And so if you have $1 billion of capital, just use easy math, and a $2 billion book, 26% of that $2 billion book is $520 million. That's 52% of the investor's capital in software in one sector. So now everyone's woken up after years of, can we have one more, sir? And can we load on more software because, and more higher turns of leverage, and woken up to the reality. So these are great firms. All the firms will survive this. All the big, strong private equity managers, all the largest direct lending managers. But there's a big lesson to be learned. It's in risk management, because I believe it was too much concentration for what should have been a diversified portfolio.
Some suggest there's going to be a fair amount more pain to be absorbed.
We haven't begun to see it yet. What we've seen is the reset of valuations in the public equity market, and the scare that's now happened in private credit as investors are running for the doors from some of the open-ended funds. That's what we've seen. We haven't seen the default wave start to happen yet, and that will happen in years 27 and 28. Now that we've had a reset in valuations, I believe default rates will go to 15% in the software sector.
Even with that, the leap to go from that to something systemic is too big for some to make. I want you to listen to what Alan Schwartz, the executive chairman of Guggenheim, had to say on this network earlier today. We can react on the other side.
I don't think it's going to be as systemic as what happened with the mortgage markets, primarily because what happened leading up to the crisis was the assets that spasmed were heavily inside the banking system. And the banking system are, in essence, what I call them the arteries to get liquidity back into the market when needed or into the economy. In this case, they're off and out of the banks. The banks have exposure, by the way. It's not insignificant, but it's not a fraction of what it was in the previous cycle.
Do you agree with that?
Well, I agree with his conclusion, but I'd say the following. When you had the Case-Shiller index go down 33% from peak to trough in housing, a housing market collapse, that affected every home owner in the country, and it affected also mortgage credit. So not only were the banks hammered, and you had bank failures that time around, versus the banks being stronger than they've ever been today, but you also had the consumer getting crushed because their housing values were collapsing at the time, their net worth was collapsing, and you had a lot of layoffs in the job market. So there's no existential risk today, or no systemic risk today, because software only represents 1% of all private companies and only 7% of all public companies. The risk is in the private credit lending business, not the economy, and not the stock market at large. And certainly not the banking system, and certainly not on Main Street, which is with individuals.
What if it's
so there's no systemic risk.
What if it's broader than just software? Like Jeffrey Gundlach was on with me yesterday and said, I was talking a year ago, it felt to me a little bit like 06, where everything's overvalued and cracks are starting to form, and everyone's like, it's all contained, it's no problem, it's just software. But it's not just software. We all know that the private credit industry was deluged with redemption requests that far exceeded the 5%. And his point is that, redemption requests beget more redemption requests, and therein lies, this gathering wave that we're still yet to see.
So let's talk about private credit and the funds, and let's unpack that for a second, because this is super important to understand. So if you have a 5% gate, now we don't have this issue at Marathon because we don't have, these retail products that we've, raise money from, and so we're not dealing with this problem. I'm just speaking in generality.
Sure.
So if you have a 5% gate per quarter, which is 20% a year, can these managers, and I'm talking about all of them, can they fulfill that requirement? And the answer is yes, because you have about 10% annual cash flow from your cash flow of your loans, then you have maturing loans, and you should be able to pay off about 25% a year in any given year to fulfill that request. So yes, the gates are up. The problem isn't with the structure. There's a run on those funds, perhaps, as people are grabbing liquidity. The problem isn't with the structures. The structures are just fine. The problem is with they have too much software risk at a time when software is going to undergo this enormous transformation. And so I ask you a question. If broadly syndicated loans are trading in the mid-80s, where should, for a software loan, and broadly syndicated loans, the liquid loans, where should a direct loan that's private be trading that has higher leverage? Probably on average in the 70s, some in the mid to high 90s, some in the 80s, some in the 70s, 60s, 50s, and 40s. There's a spectrum of that. I'm thinking the weighted average should be in the 70s. So the question is over the portfolio and valuations, not the structure. The run on these funds is not systemic. You're talking about a few $1 billion or maybe collectively $100 billion. It's a drop in the whole bucket compared to any systemic risk for a economy that's a $30 trillion GDP economy. There is no systemic risk for the economy based upon the risk that private credit has in software.
All right, we'll leave it there. I really appreciate you helping us understand this even better. Thank you. It's Bruce Richards of Marathon right here. Let's bring in CNBC contributor, Requisite Capital's Bryn Talkington, and HSBC's Max Kettner. Bryn, I'll come to you first because you do invest in some of this stuff. How concerned are you?
Well, I thought Bruce, first of all, had a bunch of things to say. And really, when you look at private credit, especially like direct lending, I think the conversation needs to also talk about private equity, because in the majority of these direct lending companies, private equity is 60%, and private equity needs to become impaired before the private credit does. And so to me, I think over the next few quarters, we're going to see where the marks are on the private equity side, and those who have a lot of software exposure, let's see what happens to the equity side. Ultimately, the creditors are creditors. They'll end up owning those companies if they get impaired. And so I'm less worried about the private credit side versus the private equity side. And I think that we'll see when Apollo, KKR, et cetera, they have what's called FRE, fee-related earnings. That's what we're going to see over the next few quarters. How impactful have these redemptions been from these private investors? And I do think Bruce contextualized it well, that if it's around $100 billion that ends up getting redeemed, that's fine for the economy, but obviously certain firms will be much more impacted from their fee-related earnings. And so I think you have to model that out before you're stepping in and buying private equity managers at this point.
Hey, Max, let's bring ourselves back to the market at large, which I think is trying to figure out how to take the news of yesterday from the president, how to expand on it today without any specifics to really get your arms around, or any calculus on how long this may now last. Do you think a bottom is in, or no?
Yeah, look, I'm not going to call the exact bottom. I think that's impossible at the moment. But the point is, for me, I think, is this the environment where you actually want to start buying, or is this the environment where you want to start throwing in the towel? And to me, even if there is the risk, then you're going to be maybe 1%, 2%, 3% too early. But clearly what we've seen over the last couple of days was a couple of days of very broad-based liquidation, where gold goes down, where equities go down, where treasuries get sold off, where even the yen and the Swiss franc don't really work as a safe haven anymore. And after those days, what we typically find when you look at the last 25 years of history, those are the days where you're much, much closer to the bottom, and where thereafter, if you look a week and a month after, your hit ratios in the likes of equities, even the likes of gold, but particularly in equities, your hit ratios, your average, your median forward returns are starting to be really positive. And I would also say, from a positioning perspective, when you look at the largest 5 equity ETFs, you've seen the biggest outflow really since 2022, on par with the depths of COVID in March 2020. A bunch of our indicators, when we look at technicals, right, when we look at things like short interest in equity versus bond ETFs, all of those are really on par with what we've seen around Liberation Day last year and around March 2020. And all of that suggests to us, you want to jump back in there.
I feel like, Bryn, you don't agree with that maybe this time is in fact different and you're not going to get the V-shaped recovery that many are hopeful for and are trying to use past, as prologue this time.
I'm always suspect of analogs. I mean, I actually agree with quite a bit of what he just said. I do think that what I'm looking at, which I've talked about before, is that 200-day moving average is Earth, is gravity, and we're bouncing around that. And there's lots of history. If we can't get back above that within 7 to 10 days, historically, that's, we've entered some dicey periods. So to me, I want to see us get above that. And I think the ingredients this week are there. President Trump said by Friday. And so I think as we get later in the week, which is, coming tomorrow, Wednesday, Thursday, we need to see some calmness from Iran and the Middle East. Otherwise, I think going into, as we get closer to Friday, I think the market's going to get a little dicier. And that's where, to me, that 200-day is so important for investors. There's tons of history around that.
All right, guys, we'll leave it there. Thanks for the time. Appreciate it. That's Bryn and Max. We'll see you soon. We're just getting started here on the Bell. Coming up next, the Senate nearing a DHS funding deal as long TSA lines weigh on travelers. You all seen the video. It's not pretty. We'll have live reports from LaGuardia and Washington after this break. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC. We're back on the Bell. TSA lines still stretching several hours at many airports around this country. MS Now's Laura Hafley joins us live from LaGuardia Airport with more on what is happening there. Tell us the latest, Laura.
Well, look, we're seeing long lines around the country at airports in Houston and D.C. and Charlotte, and certainly right here in New York at LaGuardia, where we've seen lines literally wrapped around the airport. People waiting for hours. We know that one person has waited for up to 9 hours for their plane. So why is this happening? Well, we know the DHS shutdown is making TSA officers go unpaid, and they can only do that for so long before they start calling out. We saw this during the last DHS shutdown. We know this past weekend, thousands of TSA officers called out. That number likely just to grow. And frankly, in high cost of living states like New York, for many of these TSA officers, it can take $50 round trip to commute to work. So it's really cheaper and less expensive to stay home and miss a paycheck than it is to literally pay to work. Now, this problem likely to continue, so what are we doing about it? Well, we know the Trump administration has deployed ICE agents. I saw them in LaGuardia today. It's unclear exactly what they're helping with because we know they're not trained to run luggage through the screeners. We know they're not trained to help people through security systems. So again, they're walking around in teams, but it's really unclear exactly what their responsibilities are. This will likely continue in the coming days. TSA officers not happy about it. Scott?
All right, Laura, thank you. Laura Hafley reporting for us at LaGuardia in New York. Let's send it now to Washington, D.C. Our own Emily Wilkins is there. Whether lawmakers are reportedly getting closer to a deal to end this or not.
Scott, there's been a huge vibe shift on Capitol Hill over the last 24 hours. Senators are much more confident, particularly the Republican senators, that they have come to an agreement that they can get Democrats and the White House on board with it. So what this would basically look like is that first they would move a bill that would fund most of the Department of Homeland Security. It would pay TSA officers. It would clear up those lines in airports. The only things that it wouldn't do is wouldn't fully fund ICE, and it wouldn't include some of those reforms that Democrats were looking for. And Senate Majority Leader John Thune just told a group of reporters that if Democrats want to see the changes, they're going to need to fully fund ICE. Listen to what he just said.
If they want reforms, then they ought to figure out how to help fully fund ICE. ICE will be partially funded, CBP will be funded under this proposal. But if they want to have a conversation about some of the reform ideas that they had put in front of us, then that would be contingent upon actually providing funding for ICE. And so we'll see how they react to that, but we're ready to move.
Now, Democrats have said that they are going to be sending a counteroffer to Republicans. Republicans are also trying to appease President Trump, who, of course, has been pushing for that election reform bill known as the SAVE Act. The idea is that after most of the DHS is fully funded, they would come back and try to pass additional funding for ICE, as well as pieces of that election reform bill through a process that wouldn't require any Democratic votes. Trump said in the White House that he is closely reviewing the proposal. He's yet to fully weigh in on it, and we'll be continuing to see if we get these lines cleared up before spring break can begin. Scott?
It sounded, though, Emily, quickly from the Oval Office where the president was speaking within the last hour, and I think the words that he said were something like, I'm not in favor of any deal. So I'm not sure how that plays into the calculus of what Republicans and Democrats are trying to do there.
It was a bit of a mixed message. At first he said he was going to look closely, then he said he wouldn't be a fan, and I believe that brand new DHS Secretary Markwayne Mullins said that they were going to look into it. Senators who I spoke with said that they were confident that after a group of them met with Trump last night that he was much more on board with this plan, but clearly the plan is not finalized yet, and there is a ways to go.
All right, Emily Wilkins, thank you for the very latest in Washington. Coming up next, we're just about an hour away now from a very high-stakes hearing kicking off between Anthropic and the Pentagon. We're live outside the courthouse with more on what is at stake. We're back on the bell right after this. We're back. Anthropic and the Defense Department in court today over the government's designation of that company as a supply chain risk. Mackenzie Sigalos joins us now with more. Has been outside of that courthouse all day. Hi, Mac.
Hey, Scott. So people are already lining up to get into the courtroom, where in about an hour from now, federal judge Rhea Lynn will hear arguments on whether to pause the Pentagon's blacklisting of Anthropic while their lawsuit against the government plays out. The DOJ is arguing Anthropic is a risk because it retains privileged access to Claude and could sabotage or subvert the model inside of military systems. Anthropic says that is technically impossible. Once Claude is deployed in a classified environment, the cloud provider controls access, not Anthropic. The company says it cannot unilaterally disable the model, alter its behavior, or cut off access mid-operation. Now, if the judge grants relief today, government contractors can go back to using Claude for defense work while the case plays out. If she doesn't, rivals like OpenAI, xAI, and Google will keep filling that vacuum. Scott?
Mac, thank you. Mackenzie Sigalos. Now let's bring in Big Technology's Alex Kenchowicz joins us on this and some other stories making news today. So I'm not going to ask you for a legal opinion, obviously, but how important is the outcome of this case to Anthropic?
It's pretty important, but I don't think it will reverse all the damage. So if a judge says to the federal government that you can't deem Anthropic a supply chain risk, that's okay. The ban is lifted. But that doesn't compel government agencies to start using Anthropic's technology. And given the environment in the federal government today, especially regarding the way that the president has talked about Anthropic leadership and the Secretary of War, then it can be very difficult for Anthropic to gain purchase again inside the federal government and within contractors who are sensitive to this matter. So maybe they'll win the legal battle but end up losing the war.
But what matters more, though, the designation itself or the government contracts in the bigger picture, in the march towards going public?
Well, the designation matters the most now because it prohibits Anthropic from doing business with the federal government. But once that's lifted, you're again now in competition with OpenAI and potentially Google, which have had this opening. And once a government starts using technology, it's very difficult for them to start substituting competitors in. So this is crucial moments right now for Anthropic, and they could lose a lot of ground, again, even if the ruling is in their favor.
Speaking of OpenAI, what do you make of OpenAI essentially flagging Microsoft as a risk as it itself looks to venture into the public markets?
Well, it has to, because first of all, Microsoft owns 27% of the company. But second of all, Microsoft has this IP rights to OpenAI's technology until 2032. And you've seen recently OpenAI has started to work with Microsoft competitors, namely Amazon. It needs those competitors because it needs compute beyond what Microsoft is capable or willing to offer. Without that computing power, OpenAI cannot see its roadmap through. And if Microsoft, for whatever reason, tries to get into the way, that's a big problem for OpenAI. So when you're thinking about the prospectus to go public, you have to list that as a risk factor.
I'm wondering, when you look at Microsoft's stock chart, which we just had on the screen, it's like down 23% year to date, right? It's just been an ugly performance. There's no other way to say it. It feels like whatever magic existed at the beginning of this partnership and relationship with OpenAI has somewhat disappeared. Enough that yesterday there was a price target reduction on the stock. A well-known analyst said somebody has to say it. Microsoft's issues are mounting. Is that true? And if so, what are the biggest issues?
Right, it's been brutal. It's way off its 52-week highs, and as you mentioned, down 20% on the year. I think there's two stories for Microsoft. There's the Azure story, which seems fairly strong. It's growing 39, 40% a quarter consistently, and a lot of that is on the back of the fact that it can offer that OpenAI technology to its customers, and it's the only place that can do that as a cloud computing service. The other side of it, though, is what has Microsoft done with OpenAI's technology in its own products, in products like Office? And Copilot has been disappointing. There's been an uptake of it by about 15 million people, according to the latest numbers. That's not good. And I think if you just give it the taste test, everyone will tell you that Copilot is not as good as the latest models. So I think the halo is off of Microsoft when it comes to AI, specifically because of this reason. I think effectively what people are saying is, and what this analyst is saying is, you had the head start, you had the technology, why don't you have a product that everybody believes in and is leading while you've been lapped by others, especially in this moment where software is kind of up in the air in terms of where the future is.
Is that stock chart in any way reflective of the gains that Anthropic has seemingly made with Claude at work? It feels like there's some of that in this story.
It has to be baked in. I think there's been a large overreaction today to what Anthropic can do to incumbent software companies. It's not so easy to rip out, let's say, Microsoft Office and throw in an AI agent. But that being said, the growth that Anthropic is seeing is explosive. And so you think about what the future of software growth looks like. Is it going to come in terms of selling more seats to an Office or more seats to Claude Code? And you could see the potential for Anthropic to, if not replace, at least cut off some of the growth that software companies are expecting, or maybe turn them into inputs in a chatbot. And if that happens, that's where you start to see some of this unease among investors around software.
2 minutes ago, a story moved from the Wall Street Journal, an exclusive, that OpenAI is set to discontinue Sora. What do you make of that? What do you make of that news? Because it was only released last year.
Well, there was a meeting in OpenAI not long ago where the leadership's basic message was no more side quests. I think they see the success that Anthropic is having in enterprise and coding. They realize that the economic value is there. They have this very popular consumer product in ChatGPT that has 900 million weekly active users. Who knows, maybe it's 1 billion right now. And they realize that they have to focus or they're going to get their lunch eaten by Anthropic. So I think what this is basically a diversion of resources from the compute-heavy things like video generation to the economic interests right now of the company, which is in coding and it's in business use cases and enterprise use cases. They're working to build a super app, bringing this all together. And I won't go as far as to say this is existential for Anthropic to get it right, but it's for OpenAI to get it right, but it's close to that. And so that's what I read it as. Take the resources from Sora, move it towards business, move it towards coding, and try to beat Anthropic.
All right, to be continued. AK, thank you. We'll see you soon. Alex Kantrowitz up next.
Thanks so much.
Coinbase on track for its worst day in more than a month. We'll tell you what's weighing on the name when we come into the market zone, which is coming up. Closing Bell Markets' own City Scott Croner here to break down these crucial moments of the trading day. Plus, Tanae McKeel is here with what's weighing on Coinbase. Christina Partsinevelos is looking ahead to ARM. But today we begin with you. It's great to have you back. Tell us more about this name.
Thank you, Scott. I actually want to start with Circle, the stablecoin issuer. Those shares heading for their worst day on record, down about 18-19% at the moment. Remember, they just went public a year ago, and that follows an update on the crypto bill known as the Clarity Act. The latest draft showing it could limit yield on stablecoin balances on platforms like Coinbase, which is a key incentive for investors to buy stablecoins or to even download apps like Coinbase and open accounts there. So that is why that stock is dragging Coinbase down about 10% at the moment. It is the main distribution platform, Scott, for Circle's USDC stablecoin. There is so much partnership between those two companies, and Brian Armstrong, the Coinbase CEO, has been one of the loudest voices on the need for, I guess, what he would call an even level playing field between banks and crypto players when it comes to stablecoin yields. So previously, Circle's biggest one-day drop was 15.5%, and that was just back in June. Scott?
All right, Tanae, thank you, Tanae McKeel. Christina, tell us more on ARM, please.
ARM making its own silicon for the first time in 35 years. That's the news today. The company unveiled its first in-house processor. They're calling it the AGI chip with Meta as the lead customer. Shares, though, initially popped 1.5% on the news around 1 p.m. Eastern, but then have since reversed course. Meta plans to spend up to about $135 billion on AI this year alone and is building out multiple gigawatts of data centers. So power-efficient chips are really a big priority for them. ARM says their new CPU chip delivers twice the performance of traditional server chips from Intel and AMD while using the same amount of power. Beyond Meta, ARM has also signed with OpenAI, Cerebras, Cloudflare, and SAP, with about 50 partners or so backing this launch, but this puts ARM in direct competition with the very customers it still licenses to, and that could be weighing on shares today that we're seeing that reverse course midday.
All right. Christina, thank you. That's Christina Partsinevelos. All right, Scott, this market, is it time to get in here? Is the bottom in? Did the president change the game yesterday? What's the story in your mind?
Yeah, I think there's, well, the two stories, Scott. The first is on a very short-term basis. I get it. The positioning had been skewed to the negative over the past 3 weeks as the Iran conflict has unfolded. So on a short-term basis, any alleviation of the risk around the duration of that conflict is going to be treated with, I think, a more positive, tape, which is what we've seen for the past day or two. Now, on the flip side, how this ends up playing out over the intermediate term is a little bit different. And here we have to keep an eye on some of the inputs as to where oil prices continue to trade over the intermediate term, implications for rates, currency, and so forth, and ultimately fundamentals as we go into the Q1 reporting period. So short term looks pretty good, but intermediate term, we still have some wood to chop.
I mean, we're down, what, 5%-ish on the S&P since the war started. Are you inclined to think that we need to go lower before we can reset and rebuild and figure out what's what from here?
You haven't had that classic flush where you see a major spike in volatility, you see a lot of volume that kind of points to hedging activity. This has been more taken a day at a time as the news flow unfolds. And so I think it's sort of a tricky place to say we've found bottom. I would say, generally speaking, when we talk about corrective phases, down 5 to 10% is a pretty good benchmark, and we're down right in the middle of that range right now. So I'd say short term, yeah, we're probably okay, but headlines can change tomorrow. When I come back on this, is I think we probably need another month or so to get more conviction that we're actually putting a more durable into place.
And maybe, and very briefly, if you might, just oil prices to stabilize or continue to move lower, at least continue to go up.
Yeah, so here's the deal. I'm watching the oil futures curve more than I ever have. Why? Our view going into this year in the broadening small mid-cap, other sectors away from mega-cap, tech, and growth was all predicated on Goldilocks economics, soft landing, easier Fed. Now, what's happened is that as you watch the oil price persist longer higher, it's going to make all of those a bit more of an issue.
Scott, we'll talk to you soon. I appreciate you being with us as we count down to the bell, which is ringing as you hear. We'll be negative on the S&P, the Nasdaq, and the Dow. Russell finishes in the green into OT.
The bell's ringing into the trading day at the NYSE. Dana ringing the bell, and at the Nasdaq, Coinbase Corp doing the honors. Welcome to Closing Bell Overtime. We're live from Studio B at the NASDAQ market site. I'm Melissa Lee along with Mike Santoli. Stocks lower as oil bounces back 4%. Small losses for the Dow and the S&P. The NASDAQ lower by nearly 1%. The Russell solidly in the green. More on the market straight ahead.
On our radar at the close, awaiting earnings from KB Home as builders have gotten hit hard since the start of the Iran war, even before that. Plus, there's a growing battle on the street over Microsoft, and investors clamoring for a piece of SpaceX and Anthropic sent a newly listed fund soaring 150% just this week. Interesting. So, I have to say, don't think we settled anything today.
No.
Market was kind of, S&P was kind of plus and minus flat most of the day, and yet the volatility index was up more than a point. So it shows you suspense is building in this 5-day window. We obviously don't know what's happening in terms of the path in Iran as oil ticks higher, yields tick higher. So I do think it's a little bit of a squeeze. We have about a 2% cushion between where the S&P is and where the overnight low was before the open on Monday. So not much there, but at least we are kind of holding, and I think the market's trying to remain open to a lot of different options.
Were you surprised that the lack of market reaction, we saw maybe a hiccup in response to that, the 2-year yield auction? I mean, that was a big auction.
Yeah.
It was a terrible auction by all accounts.
Yeah.
I think Rick Santelli gave it a D. Peter Brookbar was writing that the bid to cover ratio was 2.4. The average for the past year has been 2.6 plus, and dealers were stuck with 24% of the inventory.
Yeah, I don't know if it's a underreaction or if it's that the yields themselves are not pushing to absolute new highs, right? It was a bad auction. We did get upside in yields. Rick's going to probably have a little more on that. In fact, banks were strong today. So it was definitely kind of a